Good morning, everyone. Welcome to today's lecture. Today, we are going to cover some of the sections of the company's audit, and then we will be starting with the Schedule 3. And in the next lecture, we will cover CARO 2020. So, be ready, take out your books, prepare the notes with me. Okay. I hope you have read these sections and Schedule 3 so that it will be easy for us to discuss in this lecture. Also, I'll advise before start of each lecture, please read that we are going to cover in that particular lecture, because that will help you in understand that particular topic very efficiently. Okay. So guys, if you have any doubt, any question from the previous lecture also, you can post it. I'll take it up and I'll reply on that question. Okay. And meanwhile, I'll start for the today's lecture. Okay. Just a quick recap. Until last lecture, what we covered is, remember, we were discussing about section 139. Remember something? Over here. So we discussed in detail about section 139 of the Companies Act, which was related to appointment of a statutory auditor. Remember, we discussed a rule also in that case. Okay. Rule 5 for the rotation. Anything from the last lecture? Okay. So we discussed, okay, to which class of companies the rotation is applicable. Now, today, what we are going to do is, we are going to discuss now section 141. Now, what is section 141? Section 141 talks about your qualifications and your eligibility, disqualifications of auditor. Okay. Okay, so qualifications, eligibility, and disqualifications of auditor. Yeah. Now, when I say qualifications, disqualifications, now this sections provide, okay, who is eligible to be an auditor? What are the conditions, that are required to be seen? Like for an auditor, okay, these should not be there. These conditions should not be present, so that auditor should be independent. Fundamental principles. Remember, in last lecture we discussed in previous lecture we discussed about the fundamental principles. So to ensure these fundamental principles are present, there is no threat to these fundamental principles. These qualifications, eligibility, and disqualifications are required to be taken care of. I'll touch upon this topic. I'll briefly explain what are the provisions, and we'll move forward to the next section. I think this section is already covered in your IPCC, in your intermediate. You also cover this section in your Companies Act, okay, corporate law subject. So I will be covering this topic, this section very briefly, some of the important provisions of this particular section, and then we'll move forward. Okay. So 141 says that, first of all, first criteria, simple. 141 says that, okay, a CA in practice, or if it is a partner of a CA in CA firm, then he is eligible to be an auditor. So the first criteria says that, okay, either he should be CA in practice or partner in firm. Okay. He should be CA in practice or partner in a CA firm to be eligible to be statutory auditor. Now, you need to understand, okay, when I say firm, it includes limited liability partnership also. So it forms part, it says that, okay, firm includes LLP also. So Companies Act allows where a firm including a limited liability partnership is appointed as an auditor of the company. So, however, only the partners who are chartered accountant shall be authorized to act and sign on behalf of the firm. So it is only reserved for the chartered accountants for that limited liability partnership. Okay. This is practically my section 141 and 141, 141 sub 1 and 141 subsection 2. Okay. The main, you can say, eligibility or the disqualifications lie under section 141 subsection 3, which talks about or the following things, or the following persons shall not be eligible for appointment as an auditor of a company. The following persons will not be eligible for appointment as an auditor of the company. Which are these following persons? Body corporate, then officer of company, officer of company, then partner or employee of officer, then that person or his relative. Okay, so relatives holding securities or you can say interest in that particular company greater than rupees 1 lakh. Again, relatives in debt to company, okay, relatives in debt to company greater than rupees 5 lakhs. Again, third, guarantee given given guarantee in connection to the company or in connection to the indebtedness of third person with respect to the company. So it should be greater than rupees 1 lakh. If these conditions are present, then the person will be not eligible. Remember that. Having business relationship with company. Okay. Then if person's relative is director or key managerial personnel in the company, then you can say person is in whole time employment. Then person convicted for fraud and 10 years has not passed. So fraud convict and 10 years has not passed. Then person providing services under section 144. Remember in previous lecture also we discussed about section 144 some services which are not allowed. So yeah, so these are all the conditions, or you can say these all persons are not eligible for appointment as an auditor. Any doubt to this? This will be my reference to rule 10. Now, if any of this condition gets satisfied, okay, if any of these conditions get satisfied, then what will happen? The person will not be eligible for the appointment as an auditor, and it will be treated as a casual vacancy. So when a person gets disqualified, if the auditor becomes disqualified subsequently, then it will be treated as a casual vacancy. Okay. Any doubt? Okay. No, Jay. Both are different. Rotation of auditor is a provision where rotation is applicable. Like if it is a sole proprietorship to the applicable class of companies, then it will be applicable. One term of 5 consecutive years from the date of from the first from that particular appointment or conclusion. Then when I say retirement is something different. Retirement is something like returning auditor is not appointed, or you can say the term has come to an end. So that is something retirement. Okay. Srinidhi, when I talk about specified number of audit assignments, specified number of audit assignments are like statutory audit, companies audit assignment, statutory audit assignment that we were talking about. There is one more chapter in Council guidelines that talks about specified number of tax audit assignments. So these, when I say assignment over here, assignment means tax audit or company audit, whichever chapter it is of the Council guidelines. They talk about, okay, how many company audits or how many tax audit at max a CA in practice can take up. I hope it's clear. Any doubt? Any doubt, guys? Any doubt? Yeah. So, yeah, one more point that is with link to this particular topic is maximum number of audits. Okay. Now there is a ceiling provided in Companies Act also, that okay, how many number of audits a chartered accountant in practice is eligible to take. Okay. So what that particular section says, that a person who is in full time, okay, employment elsewhere or a partner of a firm, if such person or partner at the date of such appointment holds appointment as an auditor of more than 20 companies. So the limit is provided 20 companies. So what it says that a person holding appointment as an auditor of more than 20 companies, other than there are certain companies like dormant companies, small companies, OPCs, and private companies having paid up share capital less than 100 CR. So if he is holding more than 20 companies as an appointment as a statutory auditor, then in that case he will be disqualified, or he will not be eligible for appointment as an auditor. Okay. So Companies Act also provides a ceiling on the limit of total number of audit a chartered accountant in practice can take. So maximum audit less than 20 companies, but excluding OPC, dormant companies, small companies, and private companies having paid up share capital of less than 100 crore. Okay, so these are required to be excluded while counting the limit of 20, and this is a maximum limit above which if a chartered accountant in practice cannot take an appointment as a auditor for a company if he is already holding 20 appointments as an auditor in those particular companies. Any doubt? Now same way there are limits prescribed in the council guidelines also, so you need to consider both of the limits. Both limits should satisfy and both provisions should satisfy for the maximum limit of of the audit. I hope it is clear. Sorry. Any doubt till now, guys? Any doubt? Thank you. Okay, good. Now this was with respect to eligibility and diseligibility and disqualification basically. If any of the condition from this satisfies, then the person will not be eligible for appointment as an auditor. Okay. Now we saw these conditions. I'll also suggest you, to also continuously take the notes with me so that you can revise it at a later point in time. Okay. Now moving to the next particular section for today is removal of auditor. Okay. Now there is a procedure that is required to be followed to remove the auditor. So we'll see that particular procedure over here. Okay. Now, first of all, yes, auditor can be removed from his, position of auditor. Auditor can be removed, but there is a way. The way is auditor to remove an auditor before expiry of his term. So we are talking about before expiry of his term. Okay. In order to remove the auditor before expiry of his term, a special resolution of the company is required. And that special resolution is required, after the approval of, or you can say prior to the special resolution, you need an approval from the central government. So there is a process that, okay, you need to file first ADT2 to the central government for the removal of audit with fees that is there for each and everything. Okay. Then this application is required to be made within 30 days from the date of board resolution to the central government. once you get an approval from the central government, you need to pass special resolution within 60 days. Simple. So first it will start with board resolution. Okay, in board resolution, they will decide we need to remove the auditor before expiry of his term. Okay, before expiry of his term. Now within 30 days, they need to file ADT to where they will take approval of central government. Once they receive the approval of central government, now within 60 days, they need to pass special resolution, okay, in AGM or not AGM, it will be EGM, but I'll write general meeting, in general meeting. So they need to pass special resolution within 60 days from the date of approval of central government. And then you can remove the auditor before expiry of its term. This is the basically process. However, now when all of this procedure is carried, then an opportunity of being heard is required to be given to an auditor. Okay. So he is required to provide, an opportunity of being heard. Okay. Like if there is a board resolution, you need to communicate. Okay, we have taken this board resolution. Before taking the board resolution, okay, these are the reasons or grounds on which we are, thinking to ask you to leave the position of auditor before expiry of your term. And he needs to, and the board needs to provide him an opportunity of being okay, what is the scenario from his side. Okay, now once the auditor resign, if the auditor has resigned, okay, now first was the removal, now second is the resign. If the auditor who has resigned from the company, if the auditor has resigned from the company, first we are talking about the removal, now we are talking about the resignation. If the auditor has resigned from the company, then from particular date of resignation, he needs to file a statement, okay, in the prescribed format with company and registrar. Okay, now he needs to file a statement to registrar, company, okay, and if it is a government company, then CNAG. If government company, now he needs to file statement to registrar, to company, and to CNAG if it is a government company, okay, within 30 days from the date of resignation. Now what should this statement provide is, this statement should provide reasons for resignation, why you resigned. So this statement should provide reason for resignation, okay, within 30 days from the date of resignation. This auditor needs to submit. Clear? Okay. If auditor does not, okay, comply with this provision, if auditor does not comply with this provision, then he will be liable for the penalty. He will be liable for the penalty. Now, penalty maximum limit. Earlier, the limit of the penalty was different. Now, with the amendment, the limit has been reduced. Okay. So, yeah. So, the limit for this particular penalty, like the limit for the penalty, or if any auditor does not comply with this provision, contravenes the provisions of this statement, filing of statement, then event of non-compliance, penalty is applicable. And how much is the penalty? Penalty is, it should be like 50,000 rupees. 50,000 rupees or amount equal to auditor's remuneration. Whichever is less. So amount equal to auditor's remuneration or rupees 50,000, whichever is less. Now let's say it's a continuing failure, not a one time, but the failure is still going on for multiple days. Then in that case, so in case of a continuing failure, it will be rupees 500 per day maximum. Now this maximum is an amendment over here. Earlier it was 5 lakhs, now it is 2 lakh. Okay, earlier it was a 5 lakh, maximum 5 lakh, but it has been reduced to now 2 lakh rupees. Clear? So penalty for not complying with the provisions of section 142. This is section 143. Okay. Any doubt? Any doubt, guys? Guys, the more you will ask, the more you will learn, and the more you will have the clarity for this particular topic. Okay, so don't wait whether it's a silly question or it's something pretty normal. That don't hesitate, ask. The more you will ask, the more you will learn. Trust me. Jay, yes, the limit you are talking about is a chapter 8 limit, specified number of audit assignments. It's 30 in the case of companies. Yeah, but there are again some of the things are not counted. That's a 1-person company, dormant company. Okay, so 30 audit assignments is a limit, but again some like head office, branch office are not counted as a one. So you need to think, you need to take care all those things while counting the limit. Any further doubt, guys? Nope. Okay, guys, also please provide your feedback reason, because we will be able to understand, okay, what are the things you like and what are the things where we need to improve. Okay, thank you. Okay, yeah. And now again, so coming back to the topic is now special notice. We will talk about a special notice. Now removal of an auditor is a special thing, so it also requires a special notice. Okay, so for example, when the auditor, that is retiring auditor, if you are not reappointing retiring auditor, a special notice is required for special resolution. Remember, we talked about a special resolution is required to be passed. So if there is a special resolution, then a special notice is required. Now what special notice for? We will not be appointing, or we will be appointing auditor other than the retiring auditor. Okay, so we will be first sharing a special notice for special resolution. Now this will say that, okay, not appointing retiring auditor or appointing auditor other than retiring auditor. Now, what will be the scenario is we need to send copy of this notice to retiring auditor. Retiring auditor should also be given the notice. Okay, these are the reasons for which we are seeking a special resolution. Once retiring auditor receives this, notice, then what he will do is he will provide, okay, representation. Okay, he will provide representation to the company for circulation. Now, what will be the representation? Okay, like he will, state how his was tenure and what are all the things. So he'll mention all those stuff in his representation. If this circulation, so for example, if he's sending the representation late and the company is not able to circulate, then he has a right to read the representation in the general meeting. So he'll be allowed to read the representation in the general meeting, but provided there should not be anything in the representation that it should offer like advertisement or in such nature, or something defamatory for the company which is not factually correct or true. So these things should not be present in the representation. Okay, I cannot say because the company is removing me, that's why company is bad. No, I cannot say that. Okay. Also, if representation is not circulated, then auditor is required to file a representation with registrar. Okay. If company feels that okay, there is something issue, like the representation is not appropriate, there are facts which are not correct, there are things which are not correct in the representation, then the copy of representation will not be circulated and will not be allowed to be read in the meeting. So a check will be done for the representation. Clear? Okay. Now this was special notice and the provision related to the reading of representations. Any doubt till now? Any doubt? Yeah, so if there is any late filing fee, then that particular fee will also be applicable. But you need to see that what is the late filing fee applicable for that particular form. I think it's a ADT 2, not ADT 3. Yeah, Srinidhi. Any further doubt, guys? Any doubt? Any doubt? No? Okay. Now, what if, let's say, for example, there was a company ABC. Now, auditor of that company was involved in a particular fraud. Now, what that company can do? Okay. So, with respect to other provisions and everything, either on an application made by, central government, any person concerned, or tribunal. When I say tribunal, it's a company's tribunal. So, if a tribunal, either suo moto or on the application made by central government or any other person, okay, if tribunal is satisfied, okay, the company, the auditor of the company was whether directly or indirectly involved or has acted in a fraudulent manner, or has something to do with the fraud in relation to the company, its director, its officers, then the tribunal by order can allow or direct the company to change its auditor. So what will happen is If if tribunal finds auditor involved in fraud, then if tribunal identifies that auditor is involved in fraud, then they will direct the company to change its auditor. Okay, they will direct the company to change its auditor. Okay, now whatever the, order that tribunal is passing, now it should pass within 15 days of receipt of such application. Okay, so tribunal is required to pass within 15 days. Okay. then when a final order is passed by the tribunal, so tribunal can pass an interim order. Till that time, the case is disposed or everything is clear out. So till that time, tribunal can pass an interim order. Now once a tribunal passes its final order, so the particular auditor will not be eligible to be appointed as an auditor of a company for the next 5 years from the date of particular order. Okay, so what will happen is, if auditor which is involved in fraud in final order found guilty, then for next 5 years that particular auditor will not be eligible for appointment of auditor in any company, not only this company but any company. Clear? So for 5 years he will be barred from appointment or being appointed as an auditor. Okay. Any doubt till now? Any doubt, guys? Guys, again I'll say, the more you will ask, the more you will learn. So please ask whatever silly doubt it may be. Okay, but you ask. Also, if possible, please take notes simultaneously, because it will help you to revise the topic when you will revise it next time. So it will help you to understand, okay, what was discussed, and okay, it will help you to revise your topic. Nope. Okay, no issues. Then we'll take some more sections, smaller ones basically. Okay. Wait a minute, just a minute. Okay. Okay. So other important provisions of Companies Act with related to companies audit. Okay. Section 142, which talks about remuneration of auditor. Okay. Now what section 142 says that the remuneration is required to be fixed in general meeting. So they talk about, okay, remuneration is required to be fixed in general meeting. Okay. But however, let's say when it's a first auditor, we saw that first auditor is appointed by board of directors, then in that case, board may fix the remuneration for the first auditor because the first auditor is appointed by board of directors. So remuneration for the normal cases in general meeting, but for the first auditor, it's maybe fixed by the board. That's section 142. Pretty simple, nothing much in that. Okay. Section 144. We have already seen in the past, again, just a summary, discussion. Okay. What is 144? That auditor not to render certain services. However, for the services that auditor want to render other than being, like audit service, he needs to take an approval from board. These services should be approved from board. However, there are certain services for which even approval cannot be taken. Now, which are these services? But these services are accounting and bookkeeping services, internal audit, design implementation of any financial information system, actuarial service, investment advisory, investment banking, rendering of household financial service, management service, any other kind of service as may be prescribed from time to time. So if any of the service is there, this list, then even a board approval cannot be, even a board approval cannot, allow you to perform these services. It is totally not allowed under section 144. I cannot provide audit service, plus I cannot provide simultaneously investment advisory service. I hope it is clear. Any doubt? Srinidhi, other assignments, if you're talking about, then can you elaborate what other assignments you're talking about? Okay. Any doubt, guys, till now? Any doubt? No? Okay. Then, yeah. Signing of audit report, section 145. Pretty simple. Person appointed as an auditor of the company shall sign the audit report. Simple. If you are auditor, sign it. If you are not auditor, you are not authorized to sign. So, person appointed as an auditor shall sign the audit report. Okay. Then comes to auditor to attend general meeting. Now we saw that, okay, auditor, will be sent a special notice. So for the meeting, if he is not appointed he is not appointed as a auditor, like someone else is appointed on the place of retiring auditor. But overall, also auditor is required to attend. All notices of meetings are required to be sent to the auditor. Communications are required to be sent to the auditor so that he can attend the meeting. So auditor is required to attend the meeting, general meeting, and company is required to send all the notices to the auditor. Okay. Now auditor can attend himself or through authorized representative. That is perfectly fine. Auditor is also having a right, of to be heard at meeting. Reason because if any matter which is related to the auditor, then auditor will be having right to be heard over there. Auditor shall have a right to be heard at such meeting for the businesses where auditor is concerned. Clear? Any doubt? Any doubt, guys? Jay, you cannot provide these services along with your assurance service. Like for example, if you are performing auditing of a company, you are auditor of a company. Along with the audit, you cannot perform these services, investment banking service or investment advisory service. Any doubt, guys? Any doubt? Guys, the more you will ask, the more you will learn. Remember that. So please feel free to ask any of the question. Feel. And it may happen, okay, with your questions, someone else might also learn. So everyone's questions are important. Okay. Okay. If no further doubts, then let me move forward. Now, there is a specific section on the punishments of penalties. Okay. Now, what this section talks about is what are the punishment or contraventions for certain provisions of this act or this particular these sections that we are talking about from 139, 140, 141, and all the rest of the one. Okay. Now there are amendments. I'll also take up the amendments together with this. So there are amendments in the penalties. Just a minute. We saw this particular change in penalty that was, maximum amount reduced from 5 lakh to 1 lakh. That is already we have taken care of. That maximum limit reduced from 2 lakh to 2 lakh from 5 lakh. We already saw in 140 subsection 3 penalty change. Okay. Now we are talking about change in 141, 147. Okay. This is the particular section we are talking about. Now, for the violation of 139 to 146, if there is a violation from 139 to 146, any of the provision, okay, then the fine is 25,000 to 5 lakh for company and 10,000 to 1 lakh for each of the officer. Now, what is the change in this particular section A is that word imprisonment were deleted. Earlier, there was a penalty with respect to the imprisonment for 1 year, but that verse has been deleted. Reason because for officers of the company, it has been reduced like only to the penalty amount, not the imprisonment. Second is here 139, 144, 145 are section mentioned. Specific sections are mentioned for which this 147(2) penalty is applicable. Earlier, there was section reference 143 also, which is now has been removed. So section 143 reference has also been removed. Okay. So 142, 147(2) talks only about if there is a contravention or violation of 139, 144, 145, then penalty will be 5,000 to 5 lakh for auditor or 4 times of the auditor remuneration. If contravention is willful, then 50,000 to 25 lakhs or 8 times of the auditor remuneration plus imprisonment up to 1 year. Clear? Now, if auditor is convicted for this 147(2), then he needs to refund the remuneration, pay the damages to the company, plus if any company has incurred the loss or members has incurred any loss, then he needs to pay that loss. Okay. If auditor is not paying, then the central government cannot notify any authority for the prompt recovery or payment of the fees that is there. In 147(5), okay, it talks about in case of an audit firm, partner will jointly and severally be liable for this particular any liability which will arise. And in case of a criminal liability, partners who have acted fraudulently will be jointly and severally liable. Okay. So these were some of the contraventions or punishment which are provided under section 147. Any doubt till now? Any doubt? Okay. So Srinidhi, if you're talking about other assignment like individual cases or LLP cases, like they are like auditor is auditor is allowed to take these individual cases or LLP cases. Again, you need to take care. If there is a tax audit, then there is a limit for the tax audit. Remember 60. So if it is an individual case, LLP case where there is an audit because of tax loss, then there is a limit because of tax loss in tax audits also. So if there is a any other individual case, it's a not a audit case, or you can say if there is any other assurance engagement, then you need to consider whether there is a limit or whether that particular service or that particular engagement is allowed or not as per the relevant relationship, or there is any threat to fundamental principles from that point of view. Okay, I hope I am clear. Any further doubts? Jay, investment banking service is a very big bunch, I can say. It's not just only investment banker is one sort of service they provide, but it's a very big portfolio. You can say there are multiple things covered in it. Any further doubt, guys? If I just give you an example, like what will be the part of investment banking, then you can say they provide deal advisory, mergers advisory, like mergers and acquisitions advisory. They at times they become your fund like guide you on the funds, fund managers sort of thing, fund advisory. So there are various services covered under the head of investment banking service. Okay, then let me move forward. So we saw with respect to section 141, we saw 130, we saw 139, we saw 140, 141, we saw 142, we saw 144, 45, 46, 47. Now we see the very important is 143. Okay. Why 143 is very important is reason because it talks about the powers and duties of auditor. Okay, it talks about what are the powers and duties of auditor. And when I say duties, it comes duties with respect to the reporting duties, like what to report in your like in relation to your audit. So audit report, what are the things which are covered in audit report? So that something is here. Okay, powers and duties of auditor. Okay, now if you see what are the duties of auditor is, I'll bifurcate in two sections: powers and duties. Okay, so let's talk about duties first and powers second. So what are the duties? Duties, when I say duties of an auditor, duties comes with respect to the reporting. Okay, now auditor is auditor will be having some rights and powers with respect to books of accounts, with respect to inspection. However, having said that, it is necessary for the auditor to inquire into the following matters. Now, when I say inquiries, he is required to check for the following matters. These are sometimes called as the proprietary matters. Okay, these are sometimes called as the proprietary matters, but again, it is a responsibility of auditor to look into these matters, and these matters are whether loans and advances are properly secured. Loans and advances are properly secured. Second, transactions are whether the transaction are only book entries, like if there is no actual transaction, only represented by book entries. So transactions are only recorded, are only book entries. Third, whether the company's asset consists share securities and whether they have been sold less than of purchase price. So for example, let's say company is not an investment company or a banking company. Okay, so whatever company is having as an investment into shares, debentures, or other securities, whether any of such investment has been sold at a price lesser than they was purchased by the company. So for example, I purchased the share 100 rupees, I sold at 50 rupees. So whether any such thing is happening, so sale of shares at less than purchase price. Clear? So we are talking about sale of shares at less than purchase price. Then whether loans and advances are shown as deposit. Okay, so auditor is also required to report upon whether the loans and advances made by the company have been shown as deposit. Then whether personal expenses are charged to profit and loss account, or you can say revenue account. So any of the personal expenditures booked into the company. Then whether the cash has been whether cash have been received for shares which are allotted in cash. So if there are some shares which are allotted in on cash basis, whether the cash has been received or not. If not, whether the financial positions are misleading, or is there any issue in the financial position. Okay, so whether the cash have been received for shares allotted in cash. Okay, so these are some matters which are covered under the duties as the proprietary matters. When I say proprietary matters, you can say these matters are covered under section 143(1). Now to do all of these, auditor will have a right. So he needs some powers. If I'm required to comment on the proprietary matters, then I'm also required to have some powers. Now, what are the powers he is having at the time? Access at all times. Remember, at all times to books and information. Okay, so auditor requires an access to the books of account and all information and explanation from the officers, so that auditor can verify all these proprietary matters. Then if auditor is the auditor of holding company, if he is the auditor of holding company, then he has a right to access records of subsidiary. Otherwise, how he will comment on these matters? Okay. So in case of a holding company, he will be having a right to access the records of subsidiary and associate companies. Now, which are related to the consolidation of financial statements. Okay. So now this can be only for the purpose of finance consolidation. So if any of the detail required, like from the subsidiary company or associate company for the purpose of consolidation, then only the auditor can access the books and account of holding or subsidiary company. Okay. Any doubt till now? Any doubt? Any doubt, guys, till now? Sure, Srinidhi, definitely. Okay. Now, what we are going to do, guys, is I will be showing you. Just a minute. Let me see if I have that particular thing. Yeah, audit report. So I can show you one of the audit report. Reason why I'm showing you the audit report, because auditor is required to report on certain matters. Okay, and I just want to show you how these matters are listed in audit report. I'll show you one of the example. Just give me 1 second. I'll pull up that example. It will help you understand, okay, how these things are disclosed in an actual audit report. Just give me 1 second. Sorry. Yeah. Yeah. So I'll show you one of the audit report. It's for the financial year 2021, because new audit reports are still not available. Okay. Let me bring up to my screen, and what we'll do is we'll discuss. Sorry for the technical error. Okay, no issues. Yeah, here it is. I'll suggest don't focus on the name. Just it's for the reference purpose. It will help us to understand how the audit reports are there. Just don't focus on the name of the company. Okay. So it's an independent auditor's report. Why I brought this report over here is reason because I want to show you something, some specific points that is relevant to the topic that we are discussing. Okay. From here. Point number 17. Okay. Point number 17, if you see, talks about that further to our comments in Annexure A, as required by Section 143 of the Act, based on our audit, we report to the extent applicable. So, as per Section 143.3, there is certain additional items that you are required to report. What are these additional items? If you see, okay, 143.3 says that auditor shall also state that whether he has obtained all the information and explanations necessary for the purpose of audit. Over here, if you see, yes, they said we have sought and obtained all the informations and explanation to the best of our knowledge and belief were necessary for the purpose of our audit. So whether you have received information, so then you need to provide an answer for that. Whether you have received the information, then answer that. Second, whether proper books of account has been kept. So they will say yes, in our opinion, proper books of account as required by law have been kept by company so far appears from our examination. So second point is on books. First point on information, second point on books. Third point, whether the details have been received from the branch offices, okay, and how he has dealt with these reports. So how you have dealt with the branch audit reports, if there is any applicable. If not applicable, then it is fine. So in this case, there is no branch audit, that's why it's not applicable over here. Number 4, whether balance sheet and P&L agree to the books of account. Or when I say balance sheet and P&L means financial statement. So here, yes, the standalone financial statement dealt with by report are in agreement with the books of account. So financial statement agree to books of account. So they will say yes. Okay. Then whether the financial statement comply the accounting standards. So they will say yes. In our opinion, the aforesaid standalone financial statement comply the NDS specified under 133 of that. Because it's a listed company, that's why we are referring here NDS. Otherwise, it will be like normal company to whom the NDS is not applicable, then it will be accounting standard. So that will be whether FS comply accounting standard or slash NDS. So yes or no, in that basis. Okay. Then whether any director is disqualified from appointment as a director. So you will write, okay, based on representation received, none of the director is disqualified or as on 31st March. So director is disqualified. So you will say, you will reply on that basis. Okay. Then there's next point, that is observation or comments on the auditor of the auditors on financial transaction or matters which have adverse effect on company. So if there is any adverse comment, then you are required to provide the adverse comment over here. But in our current case, this example, there is no adverse comments, that's why it's not mentioned over here. Then the next point talks about, okay, any qualification, reserve or adverse remark with respect to the maintenance of accounts. So again, if there is anything, then only it will come into picture, otherwise it will not. Then the last one is whether the company has adequate internal financial control, okay, and whether they are operating effectively. So see, we have audited internal financial controls with reference to the standalone financial statement, and for year-ended diseases as per Annexure B, and express unmodified his opinion. Means everything is appropriate. Okay. So this was 143.3, that on certain matters the auditor is required to report. Now there are additional requirements also. Okay, where the auditor is required to report additional requirement as per Rule 11. See over here, Rule 11. So Rule 11 says that along with other things, along with 143.3, there are other matters on which the auditor is required to report. What are these other matters? Okay. Now other matters is whether the company has disclosed impact of pending litigation. So what I'll be doing is I will also list down these particular so that it will be easy for you to just go through the list at once. Okay, let me write it down over here. Okay. Okay. So first I'll jot down Rule 11. What are the things that as per the Rule 11 are required to be reported? Okay. So first, impact of pending litigation, whether the company has disclosed impact of pending litigation. Number 2, whether the provision for the foreseeable material losses have been made. So provision for foreseeable means which we can predict, okay, which we can able to see that okay, these losses may incur. So provision for foreseeable losses. Then okay, whether there has been delay in transfer of investor protection fund. Delay in transfer of investor protection fund. Okay. Now point number, there was one of the amendment in this particular topic. Okay, so when I say Rule 11, this was 11A, 11B, 11C, 11D was omitted, so it was removed. It was an amendment, part of amendment. 11D was omitted, and instead of 11D, there were 3 points which were added in 11E. Okay, so this is particularly I am talking about amendment, which has been which has come to Rule 11. Okay, what is point E is? Point E is bifurcated into 3 parts. 1, whether the company has provided any loan or invested in any company which is not disclosed in the financial statement. Means company loan or investment not disclosed in FS. Then the next point was whether the company has received loans on funds which is not disclosed. So again, first, when we are talking about loan or investment, given. Now loan or fund received not disclosed in financial statement. Okay. Then when I talk about whether the like the first point, loan or investment done or given, loan or fund received, we take a representation from management. Okay, we take a representation from management in these 2 points, whether the management, so it goes like, okay, whether the management has represented that or management believes that. Okay, so these are the management representations. Now the third point that comes to is whether this management representation is appropriate, or when I say appropriate means, have you identified anything which lead you believe that this management representation is not appropriate? Okay, so your question will be whether this management representation is appropriate, or have you find anything which is lead you believe that okay, this management representation is not correct. So that's the third point. This was the whole amendment 11E. Okay, rule 11E. Clear? Any doubt till now? Okay, let me then quickly move forward. Okay, then we talked about E. Then it comes to whether the dividend that is being declared and is paid with the provision, compliance with the provision. So dividend declared and paid as per provisions of Act. So you need to check whether the dividend which was declared and paid is as per the provision or not. Then the last point, and again this is very important, very crucial considering from now, because this was also a part of amendment, that whether the company is using accounting software which has an audit trail, okay, or which has a feature that anti-tempered feature, audit trail, or feature that is like audit trail cannot be tempered or cannot be modified, and evidence can be preserved. So whether the audit software, sorry, not audit software, sorry, accounting software, has audit trail feature. Now this is applicable from after 1/4/2022. So after 1st April 2022, each and every company is required to use accounting software which has a feature of audit trail, which software maintains audit trail as a part of evidence. Okay, so these are the points on which in our audit report the auditor is required to mention comments and mention the details. So that was as per rule 11. Any doubt till now? No, Jay. Subsidiary auditor access to the holding? No, it will not be possible. Reason because when I say holding auditor having access to the subsidiary, it is only limited to the purpose of consolidation. Now, subsidiaries, may not have that much role into the consolidation as holding has. That's why subsidiary will not be having access to the holdings work. Yes, so when I talk about subsidiary, I talk about subsidiary plus associates. And even if I say joint venture, then for the purpose of consolidation, yes, to the extent of joint venture, he will have right to access the books. But again, to the extent of joint venture or to the extent of consolidation purpose. Uh, by visiting the loans, and so what you need to do is you need to perform the completeness check of the loans and advances also, and the completeness check of the deposits also. So for example, if the company has, let's say, 10 deposits, whether any of the deposit from these 10 deposit is a loans and advances incorrectly disclosed as a deposit. So for the points that in rule 11 Jay, we saw rule 11E, for the first 2 points you take a management representation, and then you also perform some procedures to verify whether the management representation is appropriate or not. There are various areas where we take a management representation. During these lectures we'll discuss those areas. By performing additional audit procedure, Jay, you need to perform additional audit procedure so that let's say for example, loan given or funds given. Okay, now you will not be able to see, because if something is out of books of account, you will not be able to see by verifying the books. How you will be able to see? By analyzing the bank statement. Okay, by reading through the minutes of the meetings of the board of directors or something, the relevant minutes which are present. Okay, by analyzing other transactions. When I say other transactions, for example, a loan given might not be disclosed in the books of account, but let's say for example, uh, the loan which was given has been received back, and somehow it has been documented, or it is being reflecting in the books of account, or let's say bank statement. Then you can ask, okay, this money has came from somewhere or from some company, what it was for which purpose it was given. So by this way you can analyze. Mahendra, when I say audit trail means it's a feature of evidence. So for example, let's say I have passed an entry. So who created the entry, at what time and date, who was the user, then who approved the journal entry. Okay, after that, if there is any changes in the journal entry, who changed the journal entry, who posted into the system. So this is a whole feature. This is known as audit trail. Okay, from starting to end, means from starting from the creation of the journal entry to the posting of the journal entry, not only journal entry but all of the transactions. Let's say sales invoice, from starting to the creation of the sales invoice to the posting to the accounting software, a trail is maintained, which ensures that okay, no unauthorized changes to any of the entry, maybe journal entry, sale entry, purchase entry, has been done to your that particular books of account. So for example, if I tell you I posted a journal entry, now after 2 months I found, okay, I have posted a wrong journal entry, I'll delete that journal entry, matter over. No one will come to know, okay, this entry was there. But in case of an audit trail, it will not be possible now, because once you create an entry, once you post an entry, it is evidence, and the purpose of audit trail is that only. Mahendra, in the latest version, yes, the prime version, it is available. Any further doubt, guys? Any further? Any further doubt? No? Okay. What we do is, let's take a quick 10-minute break, then we'll gather back and we'll continue with the rest of the topic. Okay. And quickly then we'll start for the schedule 3. Okay, guys, welcome back. I hope everyone is recharged now. Okay, including myself. Okay, so jokes apart, uh, we saw some feature. We saw this rule 11, where some important points on which the auditor is required to comment. Okay, quickly I will take up rest of the section and then we'll move to the schedule 3 for today. Okay, then if there is any qualification, now in any of the matter, if there is any qualification, okay, either 143.3 rule 11, if there is any qualification, then provide the reason also. So you need to provide for qualification, provide reason. Okay, for each and every qualification you need to provide a reason also why you are saying a qualification exists. Okay, now the thing is, just to this makes clear, okay, why we are referring to a particular qualification, like why this qualification exists. Okay. Now there are certain provisions with respect to the, you can say, government company audit. Why government company audit are mostly audit where CNAG is also involved. So government company audit, now what happens in government company audit is that CNAG, okay, CNAG, in case of a government company, can direct the auditor, okay, can direct the auditor how to conduct the audit, or which are the important areas the auditor need to perform the audit. Some specific cases CNAG may say, okay, you perform the audit, plus also you look after these areas also, or you report on these matters also. So can be specific directions given to the auditor in case of a government company. Now once these directions are given, auditor is required to submit audit report to CNAG, including directions of CNAG, like what actions they have taken. So first CNAG will direct, auditor will prepare audit report plus comments, or you can say action or impact on directions. Okay, like how he has dealt with the directions, and all this thing, like all this particular thing he will submit back to CNAG. Okay, so this is required to be submitted back to the CNAG. Now within receipt of this particular audit report and additional comment, within 60 days CNAG can have a right to carry a supplementary audit. Okay, or he may ask for a supplementary audit by any person authorized to by him by CNAG, or comment on additional information or some supplementary audit report. So CNAG can, within 60 days of this particular submission, wait, within 60 days CNAG can direct supplementary audit. Okay, now whatever comments may be, like CNAG might provide a comment, or CNAG may ask for a supplement audit on the supplementary audit. CNA can provide a comment. So all these things should be laid before the stakeholders in the AGM. Okay. CNAG even can ask for test audit. Like for example, not related to the normal audit, but over and above the normal audit, CNAG can ask for the test audit also. So additionally, sorry. Can direct for test audit. Okay. Now, these were with respect to the government company 143.7 and 143.6. And so it goes like now we will talk about branch auditor. Branch audit. Now, there is a specific provision for the branch audit, which talks about some specific areas. Okay. Now, what this says there, that Indian branch should be audited by auditor or a person appointed by particular that appointed by him. Foreign branch should be audited by auditor or person appointed by them. Okay. Or person qualified as per the country law, that foreign country law. So where a company has a branch office, and the accounts of that particular office or branch office are required to be either audited by the auditor appointed by the appointed for the company, that is company's auditor. Under this, any other person qualified or any other person qualified for appointment as an auditor of the company under this act. Okay, under section 139 that we saw. So that should be audited by either a company auditor or any other person qualified to be appointed as an auditor. So first, Indian branch, who can be auditor? Either company auditor or other auditor can be also can also become branch auditor, but subject to 139, and we need to see the eligibility also 141. So subject to provisions of 139, 141, these are required to be complied with. Okay. Now foreign branch. Now branch which is situated outside India. We are talking about branch which is situated outside India. In case of branch which is situated outside India, who can be a branch auditor? So for the branch which are outside India, it can be either audited by the company's auditor or by accountant or any other person duly qualified to act as an auditor of that particular branch in accordance with the law of that particular country. Okay, so either our company auditor or other auditor authorized under that country's law. For example, hypothetical example. Okay, let's say for example, let's say there is one country, Canada. In Canada, let's say CPA are eligible for a branch audit. As a branch auditor, they are eligible for the appointment. So this person over here can be a CPA also. Okay. Or let's say, for example, let's say there is some another country. Hypothetical example I'm giving you. Okay. Slovakia. Let's say in Slovakia, CPA, chartered accountant, or tax professionals and government officers, they can be, are eligible for appointment of a tax auditor, a branch auditor. Then as per country's laws, anyone can become. But again, that person should be eligible to become a branch auditor as per that country's law. Clear? So that was a hypothetical example. Any doubt till now? Any doubt? Yes, Jay. Audit trail applicable for all companies. Yes, Jay. Book entries can become prejudicial to the company. For example, if there is no transaction happening, in actual there is no transaction, there is no existence of the transactions, still through book entry, if I am booking my revenue, then means in actual there is no sale, but there is only book entry without underlying substance, without underlying any existence. So it will become prejudicial to the company. Yes. So Jay, when I say action and impacts or comments on this specific direction given by CAG, auditor needs to prepare that particular document. Okay, these 10 directions were given by CAG, and these are the comments and actions that I have taken on these directions, and what is the result for that. For example, CAG said, okay, check all the documents of loan and make sure that loan which is reflected in the books of account or in the financial statement is accurate. Okay, so one of the directions, so I'll say, okay, I verified all the loan documents. Company is authorized to take this much loan. The loan is used for its intended purpose, and it has been appropriately disclosed in the books of account. So this will be comment or action or impact of that particular direction. I'll document this in my report and I'll provide that. That depends upon just CNAG. If CNAG feels, then they can direct supplementary audit and test audit. Any further doubt? And Jay, I'll say very well done. Thank you for being so participative. So guys, ask more questions, and you will be able to learn the topic in much more detail. Trust me, you will learn the topic in much more detail when you will ask the question, when you will try to question, okay, why this is so, why this is so. Not just because I am speaking over here and I am providing the information, but you should also understand the logic why it is so. Okay, don't hesitate in asking any of the question. Also provide your feedback, because it's very important for us to understand what you need and what you don't, we need to improve. Okay, so this was respect to branch audit. Then each and every auditor, okay, every auditor is required to comply with this. We already know with auditing standards. Okay, every auditor of in case of company, every auditor, even in other audits also, as it is mandatory by ICI that we are required to follow standards on auditing, but the same requirement is reinforced by the company audit also, Companies Act also. Okay, so Companies Act also says that you need to follow. that every auditor is required to comply with the auditing standards. Very important. And we do. There is no exception to it. Also, there is one of the provision that central government may prescribe standards on auditing, notified. They may notify in consultation with NAFRA. Then, reporting of fraud. Reporting of fraud. Now, why this particular topic? It's a very important topic. The reporting of fraud. Reason because it's a bit of very crucial one, and there was a change recently in this particular area also. So I'll just take up. Okay, reporting of fraud by auditor. Okay. Now, auditor is required to report fraud of 1 crore or more to the central government, and amount less than that is required to be reported to the audit committee within 2 days. So the criteria over here is amount involved in fraud. Okay, what is the amount involved in fraud? Whether the amount is greater than 1 crore or is less than 1 crore. Okay, amount greater than 1 crore or amount less than 1 crore. So if amount greater than 1 crore is greater than 1 crore, then report to central government within 2 days. If amount is less than 1 crore, okay, then report to audit committee again within 2 days. Clear? So whatever the case may be, you need to report the fraud either to the central government or either to the audit committee. Or when I say audit committee, if the audit committee is not present in that company, then it will be replaced by board. Okay. Okay. Then there is rule 13 that auditor is required to follow. Okay. So fraud of 1 crore or more should be reported to the central government that we saw. And fraud of less than 1 crore is required to be reported to the board within 2 days that we saw. That is also part of the rule. But over and above that, okay, what auditor is required to do is auditor shall report the matter to the board also. Okay, an audit committee as the case may be, okay, but not later than 2 days of his knowledge, seeking their reply or observation within 45 days. So what auditor need to do is, now if auditor want to report to the central government, report the matter to the central government, then first seek a reply. So I'll just move forward this one bit one. To report, first seek a reply from either audit committee or /board. Now you need to seek this reply within 2 days. Okay. You need to seek this reply within 2 days. Now means you need to send a response. Okay, please provide your reply within 2 days of the knowledge. Like, okay, you have identified something, within 2 days, send them, okay, seeking their reply. Now they will get 45 days to response. Once they will get the 45 days to response, what auditor is required to do is, on receipt of such reply or observation, auditor shall forward his report and reply or observation of the board or audit committee, as may be, to the central government within 15 days. Okay. So first case can be within 45 days, auditor received the reply. If he has received the reply, then auditor plus, like, auditor, his report, auditor's report on fraud plus reply from audit committee or board send to central government. Now this is required to be shared within 15 days. Okay, within 15 days. Clear? Now this is when you receive the reply. But what if you don't receive the reply? If you don't receive the reply within 45 days, then forward your report to the central government along with a note, okay, that you haven't received the reply. If I have not received the reply, then auditor report on fraud plus note, a note saying that, okay, a note saying that, okay, the board or committee, audit committee, has not provided the, what is it, any comments. Okay, that his report was earlier forwarded to the board of directors or audit committee, but they have not received any, we have not received any response. So note on no response received. So you need to provide that note plus audit report, and you need to send to the central government. Again, within 15 days. This is applicable to this also and this also. Clear? Now, when I say within 15 days, 15 days from the end of 45 days, we are talking about here. So once 45 days are over, either you will receive the response within 45 days, either not. If you receive the response, then good, forward that comments. If you have not received the response after the end of 45 days, you will get 15 days to send a note and auditor's report on fraud to central government. Clear? The report shall be on the letterhead of auditor plus auditor is required to file form ADT4, a statement in ADT4. So in both of the cases, you need to file ADT4. Clear? This was when the fraud amount is more than 1 CR. If the fraud amount is less than 1 CR, then you need to report to the audit committee. Now, within 2 days. Now, what are the things you need to report? Nature of fraud. Okay. amount involved, and parties involved. That is NAP. You need to report NAP, nature, amount, parties. Okay. Once you report NAP, then you need to also discuss or you need to ask board to like when you will see the board report will also contain these details. Okay, what was the nature of fraud, approximate amount involved, parties involved, plus remedial action that they are supposed to take. Okay, so for each of the fraud reported, the board is required to report NAP plus R also. That is remedial action in his board report. The same provisions are applicable to the cost auditor also, company and the secretarial auditor also under for their duties. Now, important is the penalties. Okay. So, if any of the auditor, cost accountant, or company secretary do not comply with this particular provision, then he will be held liable. He will be held guilty of and he will be punishable with fine or penalty. Now there was an amendment in this particular case. Okay, earlier the penalty, which was different, now it has been changed. Earlier the penalty was in case of, let's say, just a minute, sorry. Yeah. Okay. Earlier, the penalty was minimum 1 lakh and maximum 25 lakh. Okay. For other entities, and for listed entities, it was 5 lakh only. Now, it is for listed entities, 5 lakh is kept same, but for other entities, it's 1 lakh. Okay. So, maximum limit has been reduced. It has been, brought to that, okay, a penalty in any other company will be of rupees 1 lakh direct. So, penalty for non-compliance. Okay, who are under the penalty? Who will pay the penalty? Auditor, cost accountant, and company secretary. These are under the purview of penalty. If they do not comply with any of the provision above, then they need to pay the penalty. What is the penalty for listed? For listed, 5 lakh. For other company, rupees 1 lakh. Clear? This is the penalty. And there was an amendment in this penalty. I hope it is clear. Okay. Now these provisions, of section 143(12) of fraud will also apply to cost accountant and company secretary. That's why they are also covered under the penalty. So these provision of 142 is applicable, 143(12) is applicable to cost and company secretary also. That's why they are under the purview of penalty. I hope it is clear. Any doubt till now, guys? Any doubt? No, Vidula, see. So what is the procedure is over here? Like, okay, once you identified there is a fraud. So today, let's say, for example, you have identified a fraud on 23rd of March. Then within 2 days, like let's say within 25th of March, you need to send to audit committee or board of directors, okay, please provide me your response that I have identified this fraud. Now, from 25th of March, you will provide them 45 days so that they can reply on this particular thing. Okay. Let's say, for example, 25th of March, if you take 45 days, it will somewhere go around first week of May. Till first week of May, they need to reply back. And once, if they reply back within first week of May, or within that 45 days period, then you need to send to the central government within 15 days. And if they do not reply back, still you need to send to the central government with a note that okay, they have not replied back. Jay, no. It is not advisable if you have identified a fraud, then you withdraw from the audit. No. If you identified the fraud, it is your responsibility. It's your duty to report. Number two, when you identify a fraud, we change the audit procedure to increase our scope and to ensure that the fraud risk has been taken care of and the fraud has been appropriately. If we identify some fraud, then okay, at least its impact has been assessed and reported in our audit report. I hope, Vidula, like I explained the timeline, I hope it will be fine and appropriate. Otherwise, let me know, I'll explain it again. Yes, Jay. Cost accountant and company secretary are also required to report the fraud if they come across any of the fraud. Any further doubt, guys? Any further doubt? Thank you, Vidula. So, please, guys, ask as many questions as you can. It will be very helpful for you also, and you will be able to understand the topic much more clear. Okay, no issues. Okay, so let me then take up after this. Let me then take up schedule 3. Okay, now I'll start with the schedule 3. I hope, guys, you have gone through the schedule 3. What I'll be doing is I will be referring the study material which is already provided. Okay, the reason I'm saying I will refer to the study material because it's a comprehensive one. It's covered all the details. So I'm not required to what you can say is cover everything, refer any other material or need to cover any other material, because that is comprehensive one. If you see the study module issued by the ICE, it's a very comprehensive, and it is a lot helpful for you to go through all these things. So give me just a minute, I'll open it up. Just give me 1 second. I think something, my screen stuck. Okay, so yeah. Schedule 3 to the Companies Act. Okay, now as we know, Schedule 3 is divided into 3 divisions. Division 1, financial statement to whom accounting standards are applicable. Division 2, financial statement to whom Ind AS is applicable, and Division 3 for the NBFCs. Okay, now again, in each and every division you will see part 1 and like balance sheet, and part 2 your profit and loss account. So we will be discussing all these details one by one. I'll also take you through the amendments in Schedule 3, so it will help you to understand, okay, what are the critical areas and what are the amendments. Okay, I'll refer the study module because this is very comprehensive, very helpful. I'll not refer any other material here. And you also please, simultaneously, if I'm, highlighting something or marking something, it's also advisable you also do something. You also do marking or highlighting that particular portion, so that it will be easy for you to remember or to see that particular reference at a later stage and to revise that particular topic easily. Okay, good. So, as I said, Schedule 3 is bifurcated into 3 divisions. 1, 2, 3. One is for accounting standards, second is for Ind AS, and third is for NBFCs. Okay, so let's start with division 1. So before starting a division, or before going to the Schedule 3, I'll just provide you how these works, how it is structured. So in each of the division, first you will have a general comments. Okay, general comments talk about how you need to interpret this particular division or schedule, what are the key features of this division, and what are the key areas, or how to use some specific areas in this particular schedule. Then comes to the part 1, which is the balance sheet. It provides you with the minimum format of the balance sheet. Again, minimum. It's not like that, okay, this is the maximum above which you cannot disclose. No, this is minimum, and if any accounting standard or Ind AS requires you to disclose something more, you need to disclose that more. Even if act is required you to disclose more, you need to disclose more. So this is a minimum. Okay, so first, so where compliance with the requirement of act, including accounting standards, okay, require addition or amendment or substitution or deletion, then it is permissible and you are required to do that. Okay, then you are required to do that particular change or addition or deletion that should in that particular schedule, that is required. Okay, number 2, as I said, schedule is a requirement, minimum requirement. It is not in addition to the any other disclosure requirement. So other disclosure requirements you need to follow. So additional disclosure requirements, okay, by way of additional statements are required to be disclosed. So if there is any additional requirement by the accounting standard in AS or any act, you need to follow over and above Schedule 3. So again, we'll see there will be part 1 balance sheet, part 2 P&L. Each and every part will have its notes to accounts. Okay, now the schedule says itself that okay, whenever you prepare a notes to account, that notes to account should contain minimum of narrative description of the particular item. So for example, let's say I'm talking about a loan. I'll also simultaneously show you these financial statements so that it will help you to understand what area we are talking about. I have some of the financial statement with me. Again, I'll request you not to refer to the name or focus on the name, because the purpose here is to learn, not the name thing. Okay. Okay. For example, let's say this particular note is there. Sorry. It went. Just give me 1 second. Okay. Let's say this particular note is there. Okay, particular note, non-current investment. Now what schedule 3 says that whenever you prepare a note, at least you should provide a description of that particular narrative of that particular item. Okay, narrative, when I say a narrative, then that narrative means like, okay, what is the detail of that particular item, what is the nature of that particular item, information about that item. Okay, so you need to provide a narrative for that particular item, and then you need to disaggregation of the item. Like for example, if that particular section is if that particular note is different in the financial statement, then reference to that particular note. Okay, like this way, and some information. So these are the things you need to provide that for that particular item. So here if you see, you will see, okay, some of the details of narratives of that those items are given. Then it is given like what is the heading of that particular item over here. So some information also is given over here. So you need to provide these information to understand what is the nature of that particular item. Okay, so narrative descriptions plus information about items. So you need to provide that information. Additional information is something is different. Each item on the face of balance sheet shall be cross-referenced, okay, to the notes of account. So if there is an item on the balance sheet or profit and loss account, it should be cross-referenced to the notes to account. Means whatever you give in your balance sheet or P&L account, you need to provide detail of that into the notes of account. Okay. Then now there is a bit of change in this. Now we as a if you see, most of the financial statement, as I disclosed one of the financial statement over here also. Okay, they are rounded off. If you see over here, they are rounded off in certain amounts. This rounding off is done based on this guidance only, which is provided in Schedule 3. Schedule 3 says that depending upon total income of the company, again, total income of the company, you need to round off to the, if it is less than 100 crore total income, then you can round off to the hundreds, thousand, lakhs, or millions or decimals. If it is more than 100 crore, then you can round off to the lakhs, millions, crores, or decimal thereof. Okay, you need to provide the rounding off in that way. And if you use a measurement of rounding off, then you need to use it uniformly across all the financial items. So for example, I cannot do, okay, balance sheet in crores, P&L in lakhs, notes in thousands. No, if it is in crores, everything in crores. If it is in lakhs, everything in lakhs. Okay, so one unit of measurement should be used across in each and every statement. Okay, then it provides, okay, what should be the comparative item over here. So except for the first financial statement, because in first financial statement you won't be having a comparative. Except for the first financial statement, the corresponding amounts, like the comparatives, corresponding amount, the comparatives should be for the immediately preceding reporting period. Again, immediately preceding reporting period, it's said, not the financial period, financial year. So what, for example, if I'm preparing a quarterly report or quarterly financial statement, and if I'm following Schedule 3, then my immediately preceding reporting period will be at that particular quarter. Okay, so whatever period I'm presenting as of now, let's say 9 months, again the immediately preceding period, reporting period will be of that particular item. Clear? Okay, now part 1, balance sheet. Okay, now if you see part 1 balance sheet in division 1, it works in a different way. First you will identify, okay, there is a liability. Okay, liability sides, equity, shareholder funds, and all those details are given, and then you move to the asset side, which is reverse, which is a bit different in the Ind AS. If you see the Ind AS portion, Schedule 1 or division 1, division 2 part 1, just a minute. over here. This is division 2 part 1. Under division 2 part 1, sorry, we start with the asset, and that to non-current asset, that is from the order of reverse order of liquidity. Okay, so that is one major difference between the balance sheet between division 1 and division 2. Division 1 starts with the equity, okay, and then first equity side, then my asset side. In division 2, first asset side, then my equity. Clear? So let's move back to the division 1. Okay, if you see, the division 1 starts with the equity side first. You have equities and liabilities. Okay, in that you have a shareholder fund, share capital, under which you have a share capital, reserve surplus, money received against, share application or application money pending. Then starts with the liability of the portion. Then when I say liability, first non-current liabilities. Now again, when we quote here the liabilities or asset, it starts with in the reverse order of liquidity. So first non-current portions, long-term, deferred tax liability. Now when I say deferred tax liability, it is net position which is shown. If it is a net position liability, then liability. If it is a net position asset, then asset. And those are disclosed as a part of non-current, not the current one. Other long-term liabilities and long-term provisions. Okay, same way, short-term borrowings for current liabilities, trade payables outstanding to MSME and outstanding to non-MSME. Okay, other current liabilities and provisions. Now let us see the notes for this first. Then we'll move to the asset side. Now, first of all, the question comes here is, what is current and what is non-current? Okay, what is current and what is non-current? How do you identify which is current and which is not? So the general instructions which are given for this is that, okay, if any of the asset, satisfies the following criteria, which criteria is, okay, expected to be realized or consumed or sold in normal operating cycle. If I'm saying, okay, I'll realize this asset, or if I'll sell this asset, or if I'll consume this asset in the normal operating cycle, then it's a current asset for me. If it is primarily held for the purpose of being traded, then it's a current asset for me. Expected to realize within 12 months, then current asset to me. It's the cash or cash equivalent unless restricted. So for example, sometimes there is some restriction on use of cash balances. So if it is unless restricted, okay, or it's a cash and cash equivalent, then it's a current asset for me. So it will be classified as current. But if it is not classified as a current, means any of the criteria, let's say for example, it is expected to be realized not in normal operating cycle, it will take more, or expected to be realized after 12 months, then it will be classified as non-current. So this is conditions for current asset. Clear? Okay. Same way, another conditions, my current liabilities. Expected to be settled in normal operating cycle, held primarily for trading, due to be settled within 12 months, or company does not have any unconditional right to defer settlement for at least 12 months. Now earlier we were seeing, okay, cash and cash equivalent, but in liability side you don't have cash and cash equivalent. So the another point here and logical point is that the company does not have any unconditional right. I don't have any right, unconditional right. Okay, to defer settlement of these liabilities. Means when I say settlement, either through payment, either through actions or any through way, that I don't have a right to defer this settlement or to defer, paying the amount for at least 12 months. Then it will be held as a current. Otherwise, all other things non-current. Clear? Now, in both of the cases, we saw there is a normal operating cycle. What is normal operating cycle? Generally, normal operating cycle means duration of a 12 months. Generally, but it can be any other based on the business type and business nature. But usually, it's a duration of a 12 months. Okay. This was for the current liability. Any doubt till now? Okay. Coming back to share capital. The first one of balance sheet, which was there. So there is a minimum disclosure requirement which talks about what you are required to disclose. Each class of share capital. Okay. The number and amount of share authorized, number of share issued, subscribed and fully paid up, value per share, reconciliation of the number of shares outstanding at the beginning and the end of the reporting period, rights and preferences of shares. Okay. Each class of share held by its holding company or ultimate holding company. Okay. Name of shareholders holding more than 5%, share reserved under issues and options. Okay. Then for the period of immediately 5 preceding period, then aggregate number of shares or class of share fully paid up without payment being received in cash. Okay. Aggregate number of shares fully paid up as a way of bonus shares, aggregate number of shares bought back. 3 things. Okay. 1, no cash, matlab shares on non-cash basis. Shares as bonus and shares bought back. Okay. So these things for the immediately 5 preceding period. Okay. Then if there's a terms for the security for the convertible, then those terms, call unpaid, forfeited shares. Okay. Then this is a new thing. A company shall disclose shareholding of promoters. Promoters means defined in Companies Act, and details of each class is required to be given, including percentage changes like name of promoter, number of share, total percentage of sharehold, and change during the year. Okay. So these are the details with respect to the capital. I know there are a lot many details, so I'll explain you with one of the example that we have. However, this is an NDS balance sheet. Okay, just to give you a glimpse, but it will not match because the requirements are very much different between the NDS and AS balance sheet. Just to show you how it is disclosed. Okay. See how this is disclosed. You have authorized share capital, you have issued and fully paid up share capital. Okay. Then you have details regarding this. Okay. Details like how many shares were there on 31st March, how many were there on 31st March 2020 and 2019, both are given. What is the face value of each share? Number of shares on both dates. A reconciliation we are talking about over here. Remember, reconciliation of shares outstanding. Then rights and preferences attached to each class of share. Then details of shareholders holding more than 5% in company. Now, there will be some details which are not disclosed. For example, this particular thing. If there is no such transaction, if there is no such activity present, then there is no required to disclose this particular item. Okay. If there is no share reserved under options, then not required to be disclosed. So you need to see whether that particular item or that particular disclosure requirement is relevant or not. If it is not relevant, if there is no transaction, there is no need to disclose any of the thing. Okay. I hope it is clear. Any doubt? So basically what you are required to disclose in case of share capital, number, okay, amount, reconciliation, rights, holding share, then 5% and above. Okay, then these are special items. If present, then only required to be disclosed, otherwise not. Like options, share reserved for options. We saw non-cash, then bonus shares, then bought back shares, then unpaid calls, then convertible, sorry, securities. Okay, then you can say forfeited shares, and we saw promoter holding. Clear? These are the minimum requirements which are required to be disclosed, and if there is any other additional requirement by the act, by accounting standard, then you are required to disclose that also. Any doubt till now? Any doubt? Jay, you need to see whether that is, appropriately allowed or not allowed as per the foreign laws also, because if, let's say, foreign branch is a foreign you can say entity or company incorporated over there, then whether this is allowed or not, or they need a local auditor or something like that. You need to comply with the both of the provisions, law over here also, law over there also. Harshad, if you want to sell PPE next year, I'll say, you identify there is a concept, okay, asset held for disposal. First, you need to identify, you need to classify that, okay, this is the asset I need to keep as I need to show as a asset held for disposal. Now, those assets which are held for disclosure can be. So there is a altogether different requirement that is, part of accounting standard. You need to see, okay, how to classify a asset held for disposal, what are the terms and conditions, and what you need to satisfy in point from disclosure point of view. Clear? Any doubt, guys? Any doubt? Okay, Jay. Good. Okay. That we saw for share capital. Okay. The items we saw was for the share capital. Now the items we will be seeing are for the reserve and surplus. So what we are required to do is, first of all, you need to classify the reserves. Classify or segregate, you can say, like capital, CRR, security premium, debenture reserve, redemption reserve, revaluation, share of options outstanding, other reserves, and surplus from the balance sheet and P&L account. Okay. Disclosing allocations and appropriations such as dividend, bonus, transfer to reserves, and etc. Means they are asking you to show the surplus plus also allocations. So here surplus plus allocation. Clear? Now, when I say other reserves, okay, when I say other reserves, then what? Other reserve means any other reserve other than the above mentioned. Now, if there is any other reserve, then you need to specify nature and purpose of that each reserve. Okay. Also, you need to specify additions and deductions since last balance sheet under specific heads. Means you need to show opening plus addition minus usage or deletion from the reserve. Okay. And what will it give you? Closing balance. You need to show this movement for particular addition and deduction of that particular reserve. Now, another criteria over here is a reserve specifically unmarked investment shall be termed as fund. Why? Reason because, for example, unmarked investment means in front of any reserve, if you have done any of the investment, okay. Let's say, for example, I received some of the, let's say, for example, there is a requirement. I need to create a reserve, and all of the amount of that particular reserve I need to deposit into some government securities. Then that reserve will be called as a fund. Clear? Okay. Then the debit balance of statement of profit and loss is like the negative value. Let's say loss. Okay. Will be shown as a negative value under the head surplus. So if it is a loss, debit balance of profit and loss required to be shown as a negative figure under surpluses. Okay. Any doubt till now? I'll show you one example also of reserves so that it will be easy for you to understand. See, again, this is the NDS balance sheet, but just I'm trying to cross-reference what I'm discussing over there and with the how a disclosure is made. Let's say general reserve as per the last balance sheet date, an addition. Now here there is no deduction, so there is no deduction mentioned. Okay. Securities premium as per the last balance sheet date. If there is no movement, then there will be no addition and deduction. Same capital reserve, retained earnings with all the allocations. Clear? Plus nature and purpose of the reserves. Like what is general reserve, what is security premium, capital reserve, retained earnings. So with nature and purpose, they have provided the details of the reserve as per the requirement. Clear? Any doubt till now? Any doubt, guys? Guys, the more you will ask, the more you will understand. Trust me. Okay. Please ask as much as questions you can, because it will enhance your clarity about the topic. Okay. No matter how silly it is, no matter already I explained it, I can explain you again. That is perfectly fine. Ask if you don't understand. And also provide your feedback. Please provide your feedback to us, because it is very important for us to understand, okay, what additional things you want. You can provide your feedback over here also. You can provide your feedback in the app also. Okay, so it will be very helpful for us, whether you are understanding, whether you are liking the lectures or not, or what change you want from this particular lectures. Okay. Okay. No issues. Then let me move to the next item, that is long-term borrowings. Now again, I said it starts in the reverse order of liquidity preference. Okay, the most illiquid items, okay, the items which are not that much liquid will be shown first. So I'm going with long-term borrowings first. Again, it's a same way it's disclosed in the balance sheet also. So in long-term borrowings, you need to provide, okay, bonds and debentures, term loans, then from banks and from other parties. Deferred payment liabilities, deposits, loans and advances from related party, long-term maturities of finance league obligation, and other loans and advances. You need to specify the nature. Along with these details, you are required to provide additional detail of these items. What are the additional details we are talking about over here? Additional details like borrowing shall be sub-classified between secured and unsecured. Borrowing sub-classified, secured, unsecured. Reason because it will give clarity to the user, okay, which is the item secured and what is the item not secured. And nature of security that is given for each class in each case. So that, tomorrow if a bank is going to give you a loan, the bank, by seeing the financial statement, can easily identify, okay, these many loans are given, but these loans are secured ones. Plus, company may have additional asset by correlating with the fixed asset schedule. Okay, there are these assets already present which are still not given as a security, and I can give loan on these asset also. So like this way, when you go for a loan or go for a particular finance transaction, these details help the financial institutions, bank, to understand a particular your company. Even the stakeholders, the readers, the investor understand, okay, these are the borrowings, but company has asset also in front of them as a security. So somewhere it is good. So company has a good amount of security front of each of the borrowings, like this way. Clear? Any doubt? Okay. Then you need to provide details whether the loan have been guaranteed by directors, or others, an aggregate of amount of such loan under each head. Okay. Then for the bonds and debenture, you are required to provide rate of interest, particulars of redemption or conversion, maybe stating in descending order of the maturity, or starting from the fast date redemption, conversion date, as the case may be. So for bonds and debentures, rate of interest, particulars of redemption, plus in descending order. Okay. So then for any redeemed bond or debenture, power to reissue shall be disclosed. If there is a power for the company to reissue that bond or debenture, then that is required to be disclosed. Repayment of term loans and period and amount of continuing default as on balance sheet date in repayment of loan and interest. So two things. One, repayment of term loans, terms of repayment, plus continuing default, amount and period of continuing default. These are the details you need to provide with respect to the long-term borrowings. Let us see one example again. Again, India's balance sheet, not AA's balance sheet, so things may look different. See, term loans, loans from related party, whether secured, unsecured, detail is given. Okay. Term loan, loan from related party, whether secured, unsecured, these details are given. Then you can see over here, details are provided with respect to, their security, their repayment, all those details are provided over here. Just a minute. Outstanding loan from Yes Bank. Okay. A secured through first charge rank hypothecation on borrowers, Parsa East and Canton blocks, immovable property and movable properties. Yes Bank is repayable in 40 equally installment from May 2020. Outstanding loan from IndusInd Bank, secured through subordinate charges over current asset. 5 repayable in 5 equally installment from June 2020. Again, Sunborn Developers Private Limited loan from unsecured loan. It's not a secured, it's unsecured. Okay, and it is repaid during the year. Above loan carry interest range from 9 to 11%. Current maturities of long-term borrowings are referred somewhere else, so they are given below. So this is how something is disclosed in line with requirement. Any doubt till now, guys? Any doubt? Any doubt? Absolutely, Vidula. I will be doing that, but not in detail. Some of the questions, not all the questions, I can take it reason because of the time constraint. But yes, I will be tried. I will try to discuss that so that it will help you. Yes, Vidula, you need to follow the order in the format because at least in the balance sheet you need to follow. I'll say the order in the balance sheet is at least required to be followed because that is mandatory. So if I'm first disclosing long-term borrowings, then first should be the long-term borrowings, then deferred tax liabilities, then other long-term liabilities. I cannot bring current liabilities above. I even cannot reshuffle over here because it's on the basis of liquidity preference that is decided already. I hope it is clear. Any further doubt, guys? Any further doubt? Guys, I'll request you to ask as much as you can. It will enhance your clarity. Trust me in this. These topics, I know these are bit topics where you may think, okay, it's a more of a theory sort of thing. Practicality is less less practicals are there, but again, the only way to enhance your understanding is by asking the questions, reading it thoroughly. Okay, what is the given, and understanding the logic, why it is so, why long-term borrowing is given first, why a short-term borrowing or current liabilities are given subsequently. Understand the logic of each and every item, why this is required to be disclosed. If you understood the reason or the necessity for the disclosure in Schedule 3, it will be very easy for you to remember it. So each and every item which is there in this particular schedule has a purpose behind it. Why this item is required to be disclosed. Understand that purpose. Think of that purpose, and then you will get the understanding. Okay. Then you will, it will be easy for you to learn. Okay. Now, then other long-term liabilities. So in case of other long-term liabilities, you need to disclose whether it's a trade payable or others that is required to be disclosed. Then long-term provision. If it is long-term provision, then you need to provide, okay, you need to segregate between provision for employee benefits or others. Whenever there is a others, you need to specify the nature. For short-term, same. As we saw the long-term, same for the short-term. If you see over here, instead of bonds and debentures, it will not be there, but term loans, deposits, loans and advances from related parties, these will appear over here. See, short-term borrowings shall be loans repayable on demand from banks and other parties, loans and advances from related parties, deposits and other loans and advances. Also, again, these are required to be classified between secured and unsecured. For each and every loan, you need to classify secure and unsecured, and nature of security that has been given. Okay. Now, another thing that is you are required to disclose over here in short-term borrowings is same, whether the loans have been guaranteed by directors or others, and aggregate amount of such loans, period of default on the balance sheet date. Okay, if any there is in case of repayment of loan and interest, and current maturities of long-term borrowings. Current maturities of long-term borrowings, these are required to be disclosed separately. So you need to show current maturities, means the amount that is required to be paid within next 12 months. Clear? Any doubt? Any doubt till now, guys? Okay. Now I'm going to discuss one of the part which is amendment in Schedule 3. That is trade payable schedule. Earlier in the trade payable schedule, you were supposed to disclose details of this particular FA. But now along with this, there is an additional requirement. Additional requirement of providing aging based on classification. Aging based on classification. Now I'll tell you why this is required. This requires because to understand, okay, for example, let's say for example MSME. Now the amounts, let's say amounts are in rupees crore. For example, hypothetical example. Let's say I have 100 crore over here, less than 1 CR. Okay, normal cycle, this happens. In within 1 year, my rotation keeps on going. Okay, 1 to 2 years, let's say 30 CR. 2 to 3 years, 10 CR. More than 3 years, 10 CR. In total, it will be 150 CR. Same way, others, let's say for example, 20, 10, 5, 5. Disputed ones, 10, 5, 0, 5. Okay. Now, if this, just understand, hypothetical example, if this thing is given, then why this is asked? Number one, for MSME, there are requirements of prompt payment. Okay. You need to pay to the MSME on the basis, on the basis of law within some time frame. And if you don't pay, then you need to, then you need to pay an amount with interest. That's why these agings will, help the stakeholders or the, other, investors to understand, okay, how prompt you are to pay the amount to your creditors. This will not only, provide details about this particular MSME, but it will also provide details about your cash flow. Cash flow means how good you are paying your creditors, or whether you are holding your creditors for a very long time. That is something they will understand from here. Number two, it will also help us understand, say for more than 3 years you have not paid any amount, law of limitation will apply. After 3 years or after a particular time period, based on cases and facts, law of limitation will apply. Whether this is your income, whether you were supposed to reverse back this amount, these are also cases which will come in in highlight by this disclosure. Disputed ones, because at times we do not disclose that amount, or it was earlier not disclosed, okay, how much amount is it disputed between MSMEs which is yet to be paid. Okay, the reason because this shows, okay, how much amount a company's, how much amount is into the dispute, or how much amount it's stuck because of the dispute, which may be required to paid in future. This will enhance the understanding of the readers of the financial statement. This bifurcation shows, okay, how much of the transaction is being done with MSMEs and with others. So like this way, outstanding from the period of due date of payment, this particular aging is provided, and this will give enhanced understanding to the users how the company is going on the cash flow side, payable side, and with whom they are doing transactions and all this stuff. Okay, this was already there, that okay, you need to provide details of principal amount and interest due thereon to MSME, amount of interest paid by buyer in terms of section 16, amount of interest due and payable for the period in dealing in making payment. Okay, amount of interest accrued and remaining unpaid at the end of each accounting period, amount of further interest remaining due and payable even in succeeding years. So this particular FA will be correlated now with FB aging. Clear? So along with that, in disputed MSMEs, disputed others is also required to be disclosed. Okay, let's say 5,005,10, and this 10, 20, 40, 150 will match total of this amount over here, MSME and others. Okay, plus if sometimes it may be happen that okay, due date of payment is not available on invoice, then you need to consider the aging from the date of transaction. Unbilled dues are required to be disclosed separately. So this is how whole amendment with respect to the payables has been brought into the in schedule 3 to enhance the understanding of the users. Any doubt till now? Any doubt, guys? This is applicable for the financial statement from 1st April 2022, means the financial statement which will be now prepared. So I don't have a live example for this payable schedule to show you, but I hope by this example I'm able to enhance your understanding. So any doubt with respect to this? Thank you, thank you. I'll make sure that I maintain that. Thank you. Any doubt with respect to payables one, guys? Any doubt? Understand the logic why this is there. Vidula, yes, this is applicable. Jay, we are talking about unbilled dues, not unbilled revenue. Unbilled revenue, it will be your asset. Unbilled dues means amount which is yet to be billed, but you are required to pay. Means, for example, amount has been accrued. You will pay when it is billed, but it is not yet billed. Unbilled due amount. Unbilled revenue is something different. Yeah. Any doubts, guys? Any doubt? Okay. Guys, I'll suggest you go through these module, this schedule 3 well in advance before next lecture. Also go through the Caro, because we will be discussing in the next lecture schedule 3 and the Caro, and it will be very helpful for you guys. Once you feel read and when we'll discuss over it, you will be able to correlate, and that really becomes helpful to understand the things. Okay, so read well in advance, in detail. Be ready with your questions. If you read and if you already have questions, no issue, put it in the start of the lecture. I'll take it up. Even also go through whatever I have discussed today, previous lectures. Prepare your questions, post it, I'll discuss. So don't worry on the questions, ask as much you can. Okay, also please provide your feedback. That is very necessary for me. Vidula, see, you at times make a provision even though it is not billed. Let's say, for example, simple example, let's say electricity expense. You make a provision for electricity expense. You know that is amount you are required to pay, but it is not billed by that particular person. In same way, it may happen. Goods have been received by you. Okay, still now goods received, but they are yet to be invoiced. Goods have been received, we have used the goods, we need to pay the amount, but they are yet to be invoiced. Good received but not invoiced. So these are certain items that will fall under this particular category. Not the expense provision, because provision is a separate head, but you can say GRNI, goods received not invoiced, will fall under unbilled dues. Usually, yes, we roll out a communication, to ask them, okay, whether please confirm whether you are a MSME or not. We obtain a confirmation from each and every party, trade payable party. Okay, whether every creditor needs to confirm, okay, whether you are registered under MSME or you are a MSME vendor or not. And on the basis of the response that we receive, yes, we accordingly disclose these bifurcation. Thank you, Vidula. Okay, thank you, Jay. Okay, guys, thank you for participating in the lecture. Please come in next lecture by reading all those things, so it will be very helpful. Yep. Thank you, guys. Thank you for participating today.